All right, looks like I'm gonna try to do a live trade on a simulated account. Basically the same price action as a real account. I'm just practicing. I think this week, last week, I think I didn't make that much money. I don't know. I probably like broke even last week, or couple $100. That's it. I really wasn't concentrating on trading last week anyway, so. This week I'm probably gonna just trade another few days. Maybe next week I'm gonna put up my Robinhood account. I'm buying more Bitcoin, just here and there, and I'm actually continuously mining on my little new miner I bought. Just basically it's like a lotto mining. Got the Nano 3. You look it up. Costs like $100. And then I got it without the power supply, so I bought a power supply for another like $40. So total like 150 with tax and everything. But my old unit was essentially the same, but it was 10 times, it hogged up 10 times more energy. So this one I could probably run 24 hours a day and spend about $20 to $25 a month. So that's pretty good. And it's just basically a lotto miner, basically. One out of like millions, like, it's better than the lotto, but it's going down. This is where we want. So I'm probably gonna do a SPY. Let's do a SPY play here. Let's see if we can do the. Yeah, it's buy one of these. I want to buy the downside, and let's see if we can see the chart here. Why I'm making this decision. Let's go out a little further here. Right now it's basically in no man's zone right now, but I usually look at the 5-minute. See how it's zigzagging. So I'm thinking that it hit the top about right here. So I think it might be heading down again a little bit, but I'm gonna wait until maybe the RSI. This is a couple indicators I watched, but I also watched like potential trend lines here to there. So I'm going to probably hold off for another few minutes. But you can go down to the 1 minute time frame to see in a shorter time frame what it's doing. See, it's going down on the shorter time frame, but I'm going to wait another minute to see if yeah, we have another like 45 seconds left to see if this candle closes green. If it does, I'm going to hold off. So we have another 35 seconds or so left. Let's just hold off right now. Because you see how it's drastically going back up again. As soon as it hits about here, it's probably going to be going down again. But all right, we have 20 seconds. See what happens. See, it's going to be green, so I might hold off. But I'm at hold out. See, here's the high right here, the day. So this is probably all-time high too. So maybe we should wait. See right here, it's almost at the previous high right here. So we can wait until it breaks this point here, and it'll probably continue to go up, or it already passed it. So see, the high is 556.75. So that's exactly where this is going. So right now, as soon as it goes up past 556.75, see, that's the peak right here, where it's at, right where was it a previous. But here's a point where it's either going to go down or up. So I can probably get my trade ready. I'm probably going to make a trade on the downside, so I'm going to buy some downside puts here. I'm going to go tomorrow's contracts, 80 cents, do 100. And we'll see, look at the chart. See, it's still going up, so wait off, hold off for a second. Yeah, it's still going crazy up. I'm gonna wait another couple minutes. I'm gonna change it to the 2 minute. 2 minute. Yeah, it's still going up here. Hold off. The 2 minute would be, it's already like 9:19 now. It's going to turn 9:19 pretty soon right here. So we have another minute. But I think it's going to start red candling. So what I'm going to do is make the bet now. Trade. So I'm going to go 80, 84. I'm going to do like 85. Yeah, I'm going to put 85 and buy it and see if we get it. Okay, we got it. Okay, our bet. We got 100 put contracts. Average price of 82. So this bet costs $8,200 to make, right? And it's essentially just a very, very short-term play, because I'm gonna watch this thing here. See, if we do the filled orders, it'll show you how much. If we duplicate this order, it'll show you how much it costs here. $8,200 plus the commissions. Commissions are $65. So, but we just do the gross. It's $8,200. Potential profit, it says $5 million, but it's just, we're just doing short term here. And at short term, see, we're already making 250. So because we bought the puts at 82 cents and they're 84. So for every 1 cent, it's $100. So it's $250 profit. And what I can do is see if it's still going down. It's still going down. So this is a perfect scenario here. Not necessarily but see this curve is going down, and then the RSI is going down. So I think it's going to go down further a little bit. So we'll just wait. It'll probably end up going up and then going down, but you never know. It'll probably just keep going up, and I'll lose the money on the bet, you know. But basically, we're broken even now. So let's just watch it. We're probably losing now. But we still have to watch out for this here. This peak and this peak here. So right now it's at this peak right here. It's trying to break it. And it's trying to break this one. Then it has to break this one, and then it has to break this one. So so all I'm going to do is do a stop loss of like $500 stop loss. So I'm going to put a trade in now. Right? I'm going to put a trade in now to close it at the maximum $500 loss. So I'm going to do a closing order. And then I'm going to do a trailing stop, and I'm going to do 5 cents. Let's see what happens. Okay, I put it in. So right now, if it goes against us, the maximum we can lose is $500. But if you look at the actual, I think this costs $8,200. So if you do 500 at 82, look, divided by 82. So that's like 6% loss on one trade. That's kind of high, but let's see what happens. This is the contracts that expire tomorrow, and right now we're basically broke even, only down a half a cent. So So I probably took the trade early, but see, here's a stop loss right here. Stop loss is up there, but it's going down right here, so I think we might be safe. Here's our stop loss. Here it is. So and the trailing stop actually. So it seems like we're going to stop out at 80. So right now we're at a maximum $200 loss if we stop out. We bought it at 82. Well, the mark is 86, so it's 6. So it's 86, so 2, so we're like $400, $350, $400 ahead on this trade. Because you think every 1 cent equates to $100 because I bought 100 shares or 100 contracts. So for every 1 cent, it equates to $100. So I'm gonna wait. I still feel good about this. I think it might go down more, but we'll wait. I'm already stopped out, and I'm already, let's see, even if our trailing stop hits, yeah, our trailing stop right now is broke even, so no matter what, we'll only lose the commission on the trade. We won't lose any money. So because our trailing stop changes to 82, so we're gonna sell out at break even if it goes against us. So all right. So, but I think it's still going to go down based on this. See how this is heading down? This is almost trying to head down. Let's go to the 5 minute. See, the 5 minute is still going up, but it hasn't gone down as much as like the 1 minute, 2 minute. But this is a new candle forming. Yeah. Head down, that's it, man. 82. We still our stop loss is still, that means if the value of the option drops down to break even, it's going to sell out. So what we want the stop loss to do is increase so we can lock in. Like when it goes to 83 stop loss, that means we're going to guarantee $100 profit, right? See, 84. So we just locked in $200 profit right now because it's 82 and 2 cents, so that's $200. So it's going to lock in a $200 profit. But right now we're at 500. So we want this to keep going up because we already locked in $200 profit. So we're going to keep watching this. Oh, that's what we want. That's what we want. So our stop loss is probably increased to 85, yeah. So we're guaranteed $300 profit because we're stop lossing at 3 cents above our purchase price. And remember, 1 cent equates to $100. And again, this bet costs $88,200, but you have to have a lot to make a lot, I guess. If this goes to 86, we're locked in $400. So right now I can just set it, forget it, and not even close my computer, and the order is already in the sell automatically when it hits that price. I'll lock in at, well, actually it's a market order, so it can go within 1 cent of that. So so it's 85 too, so $300 possible. Right now we have a stop loss at 3 cents, but I put a stop loss at 5 cents. Yeah, anyways, we have a stop loss at 85, so it's 3 cents above our purchase price. And if I sell it right now, we're at $500. Imagine if this goes to 800, we made 10% in. Here's a timestamp, 9:19. So it'll be like 10 minutes if this goes to 800, but it has to continue to go down. You see it's going down. It doesn't look like it's going back up again. So, and we just stopped out. So what did it hit? It must have hit our stop loss, and I think we locked in 300 profit. Let's see, we got in at 82 and got out at 87. So yeah, so that's 5 cents. So we just made $500 in 10 minutes on $8,200. So that's $500, 8,200. So we made 6% profit in 10 minutes. And since this is enough for today, I'm not going to trade anymore. That's it. I might trade some options like on gold or something, but this is one trade. Walk away. That's it, man. I'm done. Ciao. That's an option. That's a quick way to make 6%. And it actually just trade went our way. But I was looking at the chart. We're already out of the trade, but we made money on these two candles here, or these three candles. We made money, and we made it on the downside, and it's still going down. So, all right, that's it for that explanation. That's a live trading. You can see the date and time here on the actual platform, July 9th, 9:30 a.m. Pacific time. Here it is here on this too. All right, that's it. Ciao.